Hello everyone, I'm Dr. Stock, and in this video we're taking a look at the market catalysts for the week, and then also where are the markets positioned right now and how might they move. That's exactly what we're going to cover in this video. I am Dr. Stock, Doctor of Education. Let's get right into it. So on Tuesday at 10 a.m. we hear from the Vice Chair for Supervision, Barr, that should give us some clarity that we're looking for on the banking sector issues. So that could be a possible catalyst for us. We also have some other things. The house price indices are also going to weigh in on this, trade good balance. And then we also see about Richmond Manufacturing Index and Fed Services Index. So that's going to be important also from Dallas. And then moving along from there, the next one we have Barr speaking again at 10 a.m. on Wednesday, March 29th. Now the big one, I think, and in my opinion, I've done a workup on this between the summary of economic projections for what the Fed says for 2023, and then also what we have coming out from Fed's GDP now from the Federal Reserve Bank of Atlanta as well. I put that up over at my Patreon if you want to check that out. That link for the Patreon is down in the description. So GDP, I think, is going to be huge for us. We want to see if we get another downward revision. We went from 2.9 down to 2.7 for Q4 2022, and we want to watch and see if we hold steady. Do we rise back up or do we fall? That's going to tell us a lot more about the strength of the economy that we have. If we experience more growth than we thought, the same amount of growth as we thought, or less growth than we thought. And then April 27th is actually where we get the advanced estimate for Q1. April is just going to be a huge month for us between Q1 earnings and also the first announcement that we get for GDP for Q1, and also really our eyes forward on the rest of that. And like I said, I did some projections based on the Fed now, or the Fed GDP now numbers that we have, a 3.2%, what that means in accordance with the SEP that we got from the Federal Reserve from the last FOMC meeting. So those, like I said, those are worth checking out. I think that's going to be huge for us. Jobless claims, we want to keep an eye on that to make sure that we don't get any surprises there. We have more Fed speeches coming out on Thursday at 12:45 p.m. Friday, we have two big things coming out then. One is personal income and outlays, which includes PCE measures. So we really want to know how consumers are spending and what sort of prices did they pay. What are those inflation measures looking at? We have consensus at 0.4, forecast from Trading Economics at 0.6. And then also about personal income, the fears of wage price spiral mostly subsiding by this point in time. Banks stealing the spotlight. We really want to hear about that safety, and that's really going to impact the markets as well. 10 a.m. on Friday, Michigan consumer sentiment. Now, Michigan consumer sentiment, I think 85% of votes were collected prior to any sort of banking crises. So the remaining 15%, how are they going to influence it since then? That's something that we want to watch. Again, coming out for March's consumer sentiment from the University of Michigan, that comes out at 10 a.m. Now, about the markets themselves, let's transition over to, there we go. So this is Moo that we're looking at, and if you want to get yourself some free stocks, check out that link down in the description. I'll show you more details on that down by the end by using my link. You can sign up and get some free stocks. What we're looking at here is the Qs, and you can see the double top that we have right here. And in my last video that I made on the markets, I said that we could possibly be seeing an M shape, so that double top, if we do happen to resist here and fall back down towards the 200-day simple moving average that I have here, that could set us up for that double top and then falling down through there. And really, we're going to have to watch as that plays out. Somebody did ask, now, what about this W shape? Well, that's possible too, that we have that. And I did say that there are some bullish arguments to be made. I am highly watchful for those next legs down. However, I also said that it is possible that through March that we do see some levity in the markets. And if we do break this 310 to 313 area, we actually did peekaboo up over it. We actually made it up to 315. That if we see that continued momentum, we could possibly move on to, well, around 319, which from the Friday's close is 3% up. We have room really up to about $330 per share before we hit really, really heavy, significant resistance. So 319, and then if we can take that, 332, and then it really, really becomes interesting to watch that as that plays out. So if the market does continue to move up, we have banking fears subside, we have strong economic information coming out, low inflation coming out. Those are things that can keep the market pushing forward. If we get Q1 earnings that are not stellar and we get forward guidance that is even worse, that is something that could cause us to leg down moving on this. And then, so those are things watching out for throughout this next week, which will close out March for us for trading. Can you believe that already, that we're closing out March? So for this week, we really want to watch and see that we push up on that value if we want to see continued strength in the markets. If we fail off of that, if we fail to break through that to take us up to 319, which is about, like I said, about between closer to 3% up than 2. So like 2 2/3 up to 3%, we could possibly see throughout this next week, assuming everything goes really well for us. Downward from there, we have the 50-day that we could fall back to, which is around this area that we have right here for support, and that lands us right around that 296. So that would be a fairly weak month for us. We actually have some minor support in here as well, around 301. So that would be more like 3% down, which I think would be a lot more reasonable. So I think it's still a week for volatility. I think we have to listen to Fed from the Federal Reserve, Barr's testimony coming out, Michael Barr's testimony, telling us what he has to say for what he's seen with the banking sector, checking out SVB and everything. So hopefully we get news that allays systemic risks there, and that could help us out. Let's take a look at the SPY real quick. There we are. And for the SPY, we're actually stuck right now between the 50 and the 200 day. We keep bouncing off 1, 2, 3 different times, and here we were stuck in between them, and that was on Thursday's trading day. Friday's trading day, we came up pretty significantly off of that, and I think as of pre-market that we're actually pushing up on that 400 level, right around where this 50-day simple moving average is. So we did have our golden cross moment back here, 50-day above the 200-day. 200-day still hasn't inflected up on us yet, at least not per the simple moving average. And somebody did say why the simple versus the exponential moving average, and for me, I like to see that nice smooth curve with all the data considered. And if I did use exponential, that would put further weighting towards the end of these things. And that might be worth looking at too. I'll put it in a different video. I'll go into more detail as to why I use simple moving average over exponential moving average. But for right now, we'll keep it simple. We'll keep it straightforward, so that way this video doesn't become too long. So it is important that breaking up above the 50-day, and then we hit some decent resistance there around that 404 mark, 403 to 404. So that gives us another percent to go up. So from Friday's close, 1, 2, a little over 2%, we have room to run up. And it is possible if we get a really strong trading week to see it go up above that. I think 406 is actually a nice upper limit on this one. So from Friday's close, that would be 11. So we still have, this could be a very good week for us if we get all good news. And like I said, we have further I should say no further bad news from the banks, and only good news about the stability of the banks worldwide. That's going to be something that could allow us to experience that upside. If we do fall back down on news, it could take us back down to the 200-day, right around 389, so about 2% down. And it took some pretty significant news. This is SVB collapsing that brought us down as low as it did. So unless we get that level of news, I think the 200-day could hold for us. So 2% down for 3% up, that's not a bad trade in the SPY. All right, so let me summarize this thing. We want to listen to what Michael Barr has to say on Tuesday and Wednesday at 10 a.m. to see if there's anything significant there for markets to pay attention to that could be possible market catalyst. GDP, I think, on Thursday is one of the big ones that we have, watching for what sort of revisions we get from GDP, telling us about the strength of the economy, the strength of consumer, and then also what PCE has to say to follow on Friday. Those are going to be very big catalysts, in my opinion, for the market. I should say personal income and outlays in total, including the PCE, and then also Michigan consumer sentiment. Has sentiment dropped? Do we see it improving as we look forward to April's metrics? We're just going to have to watch that and play out. It is possible that March is another low point for us where we drop back down, and that April we start to turn things around again. We're going to have to watch and see how the consumer feels for consumer sentiment as that plays out. So in the markets, the SPY, 2% down to 3% up, and then on the Qs, I think that we have 3% in either direction to go. I don't know that things are entirely positive for us, although we could see it move that way. So overall, sideways to bearish for this week coming up. However, I think there's a strong case to be made as well for moving upward from where we're at right now. We'll see if we have the momentum to break through the resistance levels that we see in both the SPY and in the Qs. Thank you guys for watching this video. If you want to hear more of my commentary, check out that link down in the description for the Patreon. Click the link, sign up, get access to my Patreon exclusive content. Also, you get access to my private Discord and interact with me and my community members that are over there as well. And then finally, the last thing that I have for you is this offer through Moomoo, where if you click that link down in the description, sign up, you get 17 free stocks. Again, using my link, it says join Dr. Stock. And those 17 stocks, what you do when you open the account is you deposit $100 more. They can see 7 free stocks, 2 AI draws, then 5 other stocks valued up to $2,000. If you deposit $1,000 or more, you get 17 free stocks. That's still 2 AI draws plus 15 other stocks, still valued up to $2,000. Check out the offer. It only lasts till the end of March. That means till Friday. Friday, this offer does expire, so make sure that you take action on this soon. Thank you guys for watching this video. Click the like button, hit the subscribe button, and ring that notification bell to see any time that my videos come out. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.